So my aim for this video is to give you a strategy that you can implement right now with some thorough backtesting and data collection. Hey guys, hope you're doing well. Today I wanted to show you a beginner-friendly trading strategy that you can use right now. It involves the power of 3 ICT concept. So if you're a bit unfamiliar, then check out this video and come back to this one later. I'll start by recapping the power of 3 quickly and then explain how the strategy works. There are timestamps down below, so feel free to skip to any section that you like. So the power of 3, as discussed in the previous video, is essentially a build-up of orders on one side of the market, which eventually gets run through. That is when we look for our entry, okay? The Asian range plays a key role in this, as we are looking for the Asian high or low to be taken out. Basically, price needs to go above the Asian high or below the Asian low. London kill zone is the ideal time for this to work. Check out this kill zone video on the top right hand corner for a simplified, broken down explanation on what the London kill zone is and how you can capitalize on it. You really don't want to miss that one, guys. So as you can see in this diagram, we're looking for a run below the Asian low, assuming our daily bias is bullish. If the daily bias was bearish, then we would be looking for a run above the Asian high. After that's done, then we will be waiting for our entry during the London kill zone time pocket. And guys, as you know, if you've learned ICT, daily bias is very important, so I'll definitely be coming up with a video on how I'm using daily bias, understanding it, challenges, everything like that, so stay tuned. We will be using fair value gaps for entering. Check out this video right after for the easiest explanation of what a fair value gap is. Trust me guys, it's a banging video. Now for our take profit, we'll be looking for the Asian range high where buy side liquidity is resting. This is of course if the daily bias is bullish and if there has been a market manipulation down. If you don't quite understand liquidity concepts and some of the words I'm using, then make sure to check out this video in the top right and the only liquidity video you'll ever need. You don't want to miss that one. Now that the theory part is out of the way of the strategy, let's get into the nitty-gritty and show some of the real trade examples of this strategy. Before we move on, I just want to say make sure to like this video if it's helping you out so far, and stay tuned and subscribe for more upcoming videos just like this. Thanks a lot guys, I really appreciate it and it helps the channel out massively. This is the example that we're going to be looking at, and this happens very frequently in the market, so I encourage you guys to go back into your charts and see this happening over and over again, because that is what's going to build up confidence at the end of the day. The red box is the Asian range. If you've seen my previous videos, then you'll know why this is important and how we can use it. So for the strategy, in this case, my daily bias is bearish, but on my daily analysis, I've predicted that the market is going to go down. So on the 15-minute time frame, which is right there, what I want to see is a run above the Asian high. This is the Asian high. So if we look at the high here, the Asian high is coming at 108.359. So I want to see a run above the high. I want to see price go above this line, which it does here, but I want to see that around that 2 o'clock time, and then I'll be looking for my entry. In this case, it's already gone above, so I will be looking for my entry, but only at that 2 o'clock time, New York time. Now let's go to 2 o'clock. So as you can see, this is 2 o'clock. So now what I'm going to do is I'm going to drop into the 5-minute time frame, and this is where I'll be hunting my fair value gap. I want to see a market structure shift, and then I will see a fair value gap to enter. I'll definitely be coming out with a video on, what exactly a market shift is or a break in market structure is. So stay tuned for those videos because they're going to be really banging and really useful for you guys. As you can see here, this was that buy side liquidity. This is the Asian range high, and now this is the 5-minute, as you can see there. So we run above it. Okay, we've taken out this buy side liquidity. Let me just move this down so it's easier. We've taken this buy side liquidity out. Now, I'm predicting it's going to go lower anyway, right? Because the daily bias is bearish. So what I want to see is a fair value gap form around here after a market breaker shift, which is basically something like this. We go up, this is a low right there, and bam, we smash through this. This line, this was a low, and price comes down and takes it. This is the break in market structure. So I'm going to be looking for this, and then I'm going to be looking for a fair value gap to be formed here, which is going to be the entry point of the strategy. Now let's play price on and see if we get a fair value gap that will present us an entry. There we go guys. So if you've seen my fair value gap video, or if you just know what a fair value gap is, then you will see this is our market break shift or break in market structure. This was a swing low, a high low to the left of it and a high low to the right of it. This gets broken, and look at this displacement. What does this candle show? It shows clear sellers in the market. So once we see that, once we have our break in market structure, let me just draw a line here like that. and I'll make it red so it's easy to see. So once we have that break in market structure, this is the fair value gap. Just draw a rectangle to show that, and I'll make it entry. This is our fair value gap. This is our entry. So as you guys know, fair value gap is three candle pattern. 1, 2, 3. Our entry is on the high of the last candle, and our stop loss goes right above this, which is candle 1 and a swing high. Stop loss right above there. It's like a 6 pip stop. If your risk is, if this is too small for you guys, you can just cover this high as well for like maybe an 8 pip stop, but I'll just put it for 6 for now. Then what are we targeting? We're targeting the Asian low. So in this whole box, where was the lowest point? Right there. So if we just extend this out, this was the Asian low. So if we draw a line there, this red line, that is going to show the Asian low, and now this is going to be our target. Obviously there's liquidity sell side below there, below there, below there, but we're going to be targeting the Asian low, because once the Asian highs run in a bearish situation, the Asian low is a really good target and gets hit most of the time. So put this there, round up, there you go, 1 to 2.1 risk to reward, so a 1 to 2 R if you want. There, we get tagged in right on the next candle. So this is the 5 minute. So once this fair value gap forms, we have 5 minutes to put our entry on, and then we get tagged in, and let's play price forward. There, plummet. So it came really close to it, but as you can see, look, this is the power of the fair value gap. 1, 2, 3. Our stop loss, even if we wanted it really tight, would be right above candle 1, which the high is 108.353. The high of this is 108.353. It doesn't even go past that candle 1. That's how strong the fair value gap is, and entries using the fair value gap. But I wouldn't suggest keeping your stop loss that tight. I would say give some breathing room, add a pip or two because of spreads as well. And as you can see, Asian low gets smashed. This was our entry, and if you want to target some previous liquidity back there, you could have even gone for a higher risk to reward, but I'm happy. I don't want to be too greedy. I'll take a 1.2 1 to 2 risk to reward, and yeah, move on with the trading day. And that is the strategy in a nutshell. Back test it thoroughly, get data, collect data, and you'll get more confident in the strategy. And that's the only way moving forward. Keep back testing and seeing this in the market every single day, because it happens every single day. It's market manipulation at its best. Guys, hope you enjoyed this video. Stay tuned for more and upcoming videos. Trying my best to upload frequently, consistently. So stay tuned, like the video if it helped you, subscribe if you're new, and I'll see you guys in the next one. Happy trading.